Yes, I think session after the lunch is always a typical, but I, the kind of the panelists that we have today, I think the kind of insights that you're gonna get, I think will keep you awake pretty well. So a very interesting topic, like is digital strategy overlapping business strategy? So I was going through some of the bank's investors presentations, right? And I was zapped to see the kind of the flow that presentation has and had, whether it's talking about the business, the customers, everything was looking like in a digital. It was looked like a completely digital presentations, right? So with that context, I'll start the discussions. Okay, and keeping the context of the time, I'll make sure that we have a questions coming from the audience. Not that's pretty good. So, Shalini ma'am, I'll start with you. You have been, Federal has been in the forefront of the digital transformations pretty well. I'm not talking about the fintech at this stage. The kind of the growth that it has done, kind of the solutions, innovation that it has brought in the industry. I just want to understand as a as management and at the board, both at the executive level as well as the board level, how do you see that the digital strategy at the bank has evolved? And when did you realize that now the digital is a completely part of your business strategy? So with that context, I'll open that discussion to you.
Thank you very much, Shashank, and good afternoon, everybody. I'm not sure how exciting a post-lunch session is going to be. I can see a lot of empty chairs. That worries me a little bit. So let's try and get some of those people from outside to come in, Shashank. Yeah. But we'll try and keep this interesting. I think we've got a good panel, which is a mix from various parts of the financial services industry. And congratulations to the Digital Fifth for organizing this. So I think to come to the question, and it's a very interesting question we've picked up for the panel discussion, is digital strategy overlapping business strategy? I think the honest truth is business strategy is digital strategy. Digital strategy is business strategy now. I'm not sure whether overlapping is kind of coming in between or not, but it is that. So I think from a federal bank perspective, can you rewind to a few years back? It probably must be about 5 or 6 years back. We had the start of a digital kind of unit, but it was embedded somewhere in the organization. It was embedded, honestly, at that time within the IT function. And there was some amount of innovation happening, but there was still a long way to go in terms of actually turning it around into becoming a core integral part of the business. That is when the bank realized that, digital has to be center stage. Digital has to be something that is not, it's not an IT function, it's not an ops function, it's not a product function, it's actually something separate. So about 5, 6 years back, we actually carved out digital and created a separate digital banking team, which was, we named it the Digital Center of Excellence, and we still call it that actually. And we named it as the Digital Center of Excellence, and we actually took people out who had expertise from various perspectives, understood the customer journey, understood technology, understood how technology can be converted into a business use case rather than anything else, and then created the team based on that. That team has been in existence since then and has been a very, very core part of the bank's overall growth over the last few years. The way the team is structured is, they're literally to that extent, you may call them kind of product managers for various parts of digital. So there are people in the team who handle mobile banking. There are people who handle internet banking. There's a separate team that looks at new technologies and innovation that needs to be done. There's a separate team that looks at lending technology. So we've split it in such a way that they develop expertise in their relevant areas. And they get measured extensively on business outcomes, actually. They don't get measured on whether you've delivered something and a tick box done, etc. They get measured on making sure the capability runs effectively and delivers on business outcomes. So just as an example, the team handling Fed Mobile, which is our mobile banking solution, and there's a team of people who are continually working on that, have KPIs which are around things like how much of revenue did you generate from mobile banking? How much of cost avoidance did you do because of the fact that mobile was used in lieu of a physical transaction? The team that does lending technology, for example, on the digital front is measured actually by the volume of throughput and personal loans that are generated in a digital fashion. So the broad point I'm making is it's reached a stage where digital is actually very core to the overall business strategy, and which is why, Shashank, I think you said most investor decks today from banks actually have kind of all pervasive digital stuff, because it's become so core to the bank that I don't, to any bank for that matter, that I don't think it can be even detached in that form from thing. But giving it that focus by keeping it as a separate unit, we do believe we've been able to add great value. Having said that, while the KPIs, etc., are important, I think one element we have tried to keep focus on is to say that there should be an element of innovation happening always in that space. Not everything will be successful. There will be some stuff that we probably may not be successful, but we need to have that team. So there is a team within that who is looking at even things like, obviously things like artificial intelligence, etc., but also things like metaverse, use cases for blockchain, etc., because innovation is clearly something that needs to be done. So to your point, I think digital is the business strategy now, and vice versa, business strategy is digital, you know. So that's really how I would put it.
No, thank you, and thanks. So, Rakesh, I'll come back to you. So, when talk about the digital transformation in the financial services, banks' digital transformation are pretty well known. But Clix, I know it's a kind of the new as NBFCs, and I read about it. Lots of the revolutionary things that you guys are doing. But from the pure lending business perspective and different products and all these things, how do you see that digital being critical to your business, and how do you incorporate the digital to create a value for in the entire the value chain across the product?
Okay. Hi, can you hear me? Good afternoon, everyone, and thanks, Shashank, for this opportunity. So I think Shalini is very well put it that today's world there is nothing called just a business strategy. I think it is all about how does digital become the part of your thinking, your DNA, and your day-to-day functioning. I think we've had the benefit of learning from the new technologies that have come in. We are a young organization. We are about 6 years old, and unlike established banks, like Federal, we've had the benefit of starting completely from the start, keeping digital at our core. And I think there is this very interesting concept that we tend to use digital transformation and digital strategy very interchangeably, but actually they're different. You know, digital strategy is when you take digital or you take technology as the foundation of your organization, and digital transformation is when you're trying to change the culture of the organization by trying to think digital. So while quite close, but slightly different. And our benefit that we've had is that the lending business that we wanted to set up, it was all dependent on the kind of technology choices that we made. And basis those technology choices, we were able to significantly accelerate the whole lending cycle the way it was run traditionally, right? So with that digital strategy in place, and just to let you know for Clix, the biggest capital expenditure we have made since inception has been technology and analytics. It's probably the highest across any NBFC sector or banks that we see, because we believe that for us, that is the core of our existence. At the end of the day, if you look at the customer, right, a customer who needs a simple loan, and if you were to look at all the touch points that a customer goes through at the journey of their lending cycle, from acquisition to gauging their interest, to being able to underwrite them, to being able to assess their intention, their KYC, disbursing the loan, and then all the way to collecting it back and issuing an NOC. If you were to look at the full journey of a customer, from a customer's point of view, you need digital to be up there in every leg. You know, imagine you have a great acquisition interface, but when it comes to underwriting, you take 20 days to underwrite the customer, right? So you've lost that edge. Or even if you've been able to underwrite very quickly using new technologies and new underwriting models, but if it takes you, 3 days to disburse the loan, again, you've lost the edge. And when it comes to collections, you have a physical person coming and knocking on your door. Again, that's not the way things can, or as an organization, we can be competitive. So for us, the benefit has been that digital is our foundation. And the technology platform that we think about day in and day out is all about continuous innovation. And for us, digital strategy is what we live for. And I think that's been the benefit of having started recently. And we've been able to leverage it as much as we wanted to. So I guess for a lending company like ours, which is recent, I would say for us, the reason of existence is the technology platforms and the digital innovations that we can bring to the customers.
Thanks, Rakesh. Now, coming to Anshul, so you just converted from a cooperative bank to a small finance bank. It's a pretty new bank. How did you created a kind of consensus within the organizations to keep the digital as a central to your business strategy and the growth to the for the Shivalik Small Finance Bank in this market? So that's where I just want to take your view.
Hello.
I think it's working. It's working.
Hello. Yeah. So thanks for the question. I think we are the youngest kid on the block. So Federal's been around for decades and Clix for 6 years. So in some sense, while we are 23 years old as a UCB, we are 18 months young as a small finance bank. And when we sat down and decided that how we're going to build out, we looked at the basic concepts and no jargon. The basic concepts were, how will you ensure that you're giving a consistent experience to the customer, be it in a branch, be it at his place, be it urban, be it rural. And you can't do that unless you have a process which is completely digital or phygital in nature. Similarly, the core aspects of banking are around, and they were spoken earlier, turnaround time, customer experience, ability to scale, your ability to repeat the same process without error again and again. And in all these, it was very clear that unless we are using a rule engine, unless we are using biometric KYC, unless you're using APIs to open loans online, none of the basic concepts of banking can actually be achieved unless you involve technology in it. So in some sense, there cannot be, as we see today banking, a banking strategy which is different from any digital strategy. And I believe that's how we came around to the fact that whatever we build, it has to be digital first. It's possible that the delivery might be physical plus digital, but you have to keep chipping away on every process and ensure that that process over time becomes digital or becomes automated, and that will only ensure your ability to meet all the other parameters.
Yeah. Yeah, please.
Yeah, now it is. Thank you. No, I think it takes time. Yeah, I think just if I may add and come in, I think the point on, I think, culture, change management, etc. And I think Anshul referred to the fact he's 18 months young and Clix is 6 years. So yeah, we've got a legacy of about 90 odd years, if I'm not mistaken. So it's about 90 odd years. But I think the challenge on change management is huge. And I think this is something we all recognize as bankers. Sometimes I do believe you guys have it lucky, Anshul, and the younger ones, Anshul, because at the end of the day, from a customer standpoint, that last touch point is the one that influences the customer. So I'll give you an example to make this clear. About 90% of our retail transactions are digital right now. So, we don't really do much manual transactions. But to be able to do that, at an average level, 90 sounds very good. But what we actually measure is, are 100% of our branches achieving that 90%? So from a Tezpur to a Kanyakumari, to wherever we have branches, we measure it really at that level to say, for the transactions in your branch, are you able to get 90% to become digital? Because that's your KPI, Mr. Branch Head. And you need to make sure that you understand what the customer need is. And you need to make sure that you're delivering to those customer needs. So I think this whole change management piece, my view, is more employee driven. If you can get the employees to imbibe that, I think you can do the best of products centrally. So my digital center of excellence may deliver the best of products, but if they remain on the shelf and not used at the last mile, then it's just, not integral to the strategy, obviously, if you're continuing to do physical. So I think to your point on change management, I think it's a huge part of the agenda. It's a huge part of getting it right at the last mile. Yeah.
Oh, thank you, Shalini ma'am. So in fact, I'll continue with the pointers from there. You brought that digital culture. Now, banking, if you look at it, is a very diverse team structure, right? From the sales to the product to the operations and all these things. to make it as a business, digital as a business study, how did you go about building that capability, digital capability across all the teams so that the business goals are aligned to? So I just want to your inputs on the, how do you build that digital capability across the teams?
This needs a little time to
Yeah,
warm up, I've realized. The mic needs. So I think you're right. Like I said, we started actually by creating the Digital Center of Excellence, but we quickly realized that that was like a, like an island in the midst of an ocean, right? There's no point in having a group of people sitting centrally and doing this when the rest of the organization was not coming along. So we've done a few things, and it's a journey, and we continue to kind of work on it. One, we made it imperative that every person's KPIs literally carry a weightage on what they have done in terms of digital. I give you one example. A branch head actually has a KPI which says how much percentage of his transactions have become digital. He doesn't have to worry, he or she doesn't have to worry about what happens in the neighboring branch. Just get your branch right. For every 100 transactions that that are coming through the door from your customers, are 90% of them being done on an internet or on the mobile. So the KPI alignment across all the units was absolutely critical. So whether it's the business heads, whether it's the branch banking team, whether it's the technology team, whether it's the ops team, they all carry KPIs which are aligned to this whole digital strategy. That was one thing. The second thing is we run a lot of, we use a platform called Yammer extensively. It's a Microsoft product. We use we use Yammer extensively for our internal communication. And in Yammer, we have specific groups which are designed to encourage people to give ideas on digital. So we have people who will throw in an idea about why don't we try this out on the metaverse? Why don't we do this with artificial intelligence? To something even as simple as why don't we eliminate this paper and go to an e-sign kind of thing. So we encourage people to there, and those ideas are all picked up and literally tracked through for execution, and an update goes back into the Yammer group to ensure that people understand where their ideas are picked up and how they're worked on. We've also done some amount of work on literally what I call digital angels. That's what we've named them. These are across all our units. They carry kind of the flag bearers of digital, if I can call it that. So they become like digital beacons, digital agents. They consistently mouth the same thing. So when a new product is launched, they are the first ones who are trained on it. Once they're trained, the expectation is that they will then train the others. So it's no one single silver bullet, Shashank, that won't work. Yeah. It's multiple steps that have to be taken at various points in time. But I think the biggest one is getting KPI alignment, because at the end of the day, we are all governed by, what you measure is what you get, right? So if you can get the KPIs aligned across the organization, I think it makes a big difference.
Thanks, and Digital Angel, like pretty.
If I can just add to Shalini's point, I think, like she said, that this is not a one-fit solution, right? It has to be a journey for every organization. So at least the good part about new age organizations and the new talent that is coming into even established organizations is that, the talent now is consuming so much of excellent digital innovations themselves, that we don't have to push the digital agenda as hard as it was 10 years ago, because they are consumers themselves. The UI, UX expectations from them, whether they're doing a brokerage transaction, whether they're doing a banking transaction, whether it's Instagram or it's whatever. So they're consumers on their own. Hence, it comes quite naturally to them. And I think a lot of organizations, including ours, has a full funnel. So at the time of joining, we assess something called as a digital quotient of an employee. So apart from various assessments that we do, we also try and assess that, how digitally savvy are they? Because whether you're working in risk management or in product management or finance or treasury, I think a sense of digitalization is key. And for us, we have an end goal. So we have actually mapped out all the processes which are manual today. And we measure against, that's our static goal, that, okay, by the end of every year, how many of those have you been able to eliminate and replace with technology? So it's a very, very well-established culture in the organization, and everybody is driving to that one goal, that how do we now become a zero manual process organization in the entire lending cycle of a customer's experience.
Thank you, Rakesh, for adding that important insight. Now, continuing the same, Anshul, if you would like to add any point, because that's also, since you've been pretty young, how did you go about the building the digital capability across that all the stream and making sure that there is a complete alignment across all the teams?
Hello. So again, we were lucky that we didn't have any kind of a tech legacy structure in place, but we were also lucky that the legacy team which was there was open to change management. See, converting from a UCB to an SFB involves a massive change, be it change in regulations, process, the kind of things you can do, the number of products available. So the fact that that team was very open to change management actually helped us ensure that when we pushed ideas around going paperless, and given that we were small, we had that advantage of saying that there is no other way except for being paperless, right? So in a branch, you typically have this thinking that no sir, this customer wants to fill up an application form. If you remove all of that, then there is no option available. So I think given that we were small and given that we were starting off, and the fact that the team was open to change, all this helped us ensure that we were able to implement that thinking around the fact that try and make everything automated, try and make everything digital in nature. And aside to that, see, everyone has their own versions of, Shalini was talking about digital angels, or what's your digital quotient. But in a small organization, I believe that the core team of, I'll say, the top 5 to 10% of the people, if they are clear on driving this agenda, then it automatically flows through the organization. So they should be clear across all entities within the bank. So I'm not saying only the tech guys, the product guys, the sales guys, people in the risk team, everybody needs to be open to the fact that, yes, I have a target of digitizing X percentage, or I have a target of removing this paper. And as long as that cohesive behavior is there, then you can ensure that the organization as it grows will have that mindset and culture.
Thanks. Now, we have been always, when it comes to digital, we keep on talking about the retail side of it, right? Individuals. Now, I want to bring that entire the focus on the MSME. When you're looking at the business of MSME business from the banking, how the digital is influencing the MSE business strategy. Anybody, because all of you serving, anybody want to pick it up?
Maybe I can start. I think we are a MSME focused lending company. So for us, MSMEs is the future. So I think again the same thing. You have to look at the pain points that the MSMEs go through, right? We all know about the tremendous opportunity on MSMEs in India. We know that there's a 250 billion, or if you read some other reports, somebody will say $300 billion credit gap in India. So as a lending company, not just us, but everybody who's involved in lending towards MSMEs are continuously innovating towards solving their problem. And the biggest problem that MSMEs have in India is, not having the right access to credit, right? And most of the access to credit is given against security. Either you need to pledge your property, or you need to pledge your receivables, or you need to pledge gold, or whatever. So I think the opportunity for new age lenders like us is that how do you now leverage technology and the new age risk, tools, artificial intelligence, machine learning, and whatnot, to be able to now underwrite customers for unsecured lending. So that's a huge opportunity and with the government's outstanding infrastructure that they have put in, trying to, whether you look at GST, whether you look at, the whole credit bureau evolution, whether you look at how quickly, your title sponsors, Perfiers, has done a wonderful job in being able to harness information from, banking sources, then the account aggregator system that is coming in. I think we are at a beautiful stage where all of these initiatives of the government, whether it's towards commerce or payments or lending, as all of this is coming together, it is going to be a boon for MSMEs and the availability of credit that will be made available. Some data, we have 6.3 million MSMEs. Only 1.5 million of them have a formal lending relationship. So imagine, Udyam registered 6.3 million MSMEs. We have about an 80% opportunity where they have not been able to get access to credit. So huge opportunity for us in the MSME space, and technology is what is going to really harness that potential for our country.
Shalini, ma'am, if you would like to add, yeah.
I can try and add to that. So I think you're right that, I mean, retail is definitely easier. There's no doubt about it. I can't visualize doing a physical application form-based credit card or personal loan any longer. It's got to be completely digital. But I think, as was said, you know, the advances that have been made on the MSME side are very notable. So, you know, whether you look at Perfios, what Perfios has done, account aggregator, what, I mean, the fact that you can get data on the ITR, data on the GST, all of it you can get through APIs now. There's virtually everything that's there that has to be, that can be done APIs based. Yes, there is an element of human underwriting that comes in, and that's because I think we're on a stage of evolution. Give it a couple of years and I think it'll clearly be all digital. So in the case of Federal, we actually a year or so launched two initiatives that I think have helped us a lot. We launched something called Federal Insta Loans. A lot of people have variants of it, so it's not like it's new, where at least up to and inclusive of the in-principle loan, in-principle approval, it's all digital. So it's only after that that we have to do some physical work, but at least in principle, he knows very clearly, the customer knows whether he can get it or not. The second is this challenge we were having on Udyam registration certificates. We spoke about it and we were literally, to be able to qualify for PSL norms, you need the Udyam registration certificate. So we were literally kind of begging and pleading with customers, you know, we need you to bring your Udyam registration certificate. Till a conversation discovered that there was an API for that also. And now we've integrated that API into the banking thing so that we now take the data and corroborate the data based on APIs. So I think the world has evolved quite a lot on the SME side. Are we there as yet? No. Having said that, I think things like account aggregator, ONDC, all of these will just make a huge difference to the thing. And, you know, addressing that population, I think the price or the value at stake is going to be really high. So in the next couple of years, maybe even just by next year or the year thereafter, if you're having a same panel discussion, I think virtually all banks will be able to say they've evolved so much that on a scale of 1 to 10, we would have probably reached 9 or 9.5 from a digital plan. Today, I think it's much lower, but we would get to that.
Wow,
yeah.
that's amazing. So we are looking at the great future on the banking side of it. Now bring the one of the important aspect. Risk and compliance is critical to the banking because it's a heavily regulated industry. So when we are building the business strategy, definitely you keep in a lots of focus on the risk and compliance. But when the same business strategy is driven through the digital, how do you make sure that risk and compliance is continue to be the central to that digital driven business strategy? Maybe Anshul, you would like to talk about it.
Hello. Yeah. So see, when you're building out any product structure, and I'm using the word loosely, it also means the tech side of it, you have to be first clear who you're partnering with. So early on, we took this call that, yes, we can build the core, but can I be an expert in every field? Can I continue to update the technology for every small substack built on top of that stack? No, we cannot. That's not our core. And hence, we realized that we have to find partners who know how to do that. Now, the typical tendency is go to somebody large and he'll build everything for you. But the reality is that you need somebody who understands that product from, if I may say, from A to Z. So he also, let me give you an example. So in a savings account, say for example, you're building something digital, or say on the FD side, he needs to know how earlier platforms were gamed from an AML or KYC perspective. That's one end of it. The other end of it is that if tomorrow you're doing a purely digital product and God forbid the customer is no more, how will you handle that situation? So I'm saying you need to look for partners who understand the whole journey and a 360-degree perspective, including compliance and risk. And that ensures that automatically your digital structure of every product is also aligned to what the regulatory guidelines are. And since we're small, we were also very clear that we can take time. We don't need to rush into any of these things. And until you have everything covered, only then launch each product category. So that's the philosophy we followed.
Super. Yeah.
I think on risk and you know, compliance for you know, let's say a lending portfolio, again, I think we are leveraging hugely on technology platforms. So today our portfolio review mechanism is all automated in the sense that you know, there are inbuilt triggers in our risk underwriting models, right? Which once the performance, each month performance of the loans comes out, they are able to quickly tell the risk team that out of the 180 variables, which are the variables in which location and which pin code are they started to breach. So I think basis the bounce data, basis the performance of the loans, I think today technology is enabling the risk managers to take decisions much faster. I mean, gone are the times when you would, get a committee in place, and at the end of every month you would decide, what portfolio changes to make. Today, the agility of the platforms that is available, the risk managers can take decisions, in a fraction of time that was earlier taken to mitigate. So I think technology is playing a very significant role in all aspects of the lending industry, and we are seeing it with our own eyes. And I think we feel very privileged that we are now building an organization in today's infrastructure where all of this is available and can be fine-tuned at a very fractional cost and at a speed which was unthinkable a few years ago.
Thanks. Yeah.
So agreeing everything with what Anshul and Rakesh have said, I'll just give another angle to this, which is I think the more the need for functions like risk, compliance, etc., to be kind of aware of what's happening in the digital space and therefore identify what the potential pitfalls are and therefore what should be the mitigating controls for that. This is particularly true because both areas are evolving so much. In compliance, while RBI has been at the forefront of a lot of lovely changes on enabling digital, etc., there are still areas where I think we're all learning as we go along. So what we did was not so much on the digital side, but on the fintech side, because as you're aware, I run a separate business division for fintech partnerships. I have a head of fintech partnerships, and when we created that team, which was probably about 12 or 14 months back, we tried a very different approach. So what we actually did was we co-opted professionals from areas like operational risk, cybersecurity, regulatory compliance, and we actually pulled them out and co-located them with the business unit, and we put them into a different office. We kind of kept them away. They retain their functional independence, which is absolutely imperative. They should retain it because that's required for the health of the organization. But they literally co-create along with my fintech team. So they're in conversations from day one. It's not like they're not aware of what the conversations are. So rather than go all the way down and, think of the product and then figure out that, oh no, this doesn't work from a compliance standpoint and then come back and have to create, this team sits together and does it. And that change has helped us tremendously because they all sit together and literally knock their heads together to come up with solutions. That culture, therefore, to say let's be involved from day one, let's think through what those pitfalls are and make sure we have sufficient mitigating controls has helped us a lot on the fintech side, and we are now evolving to how we can do that in some of the more digital side. So I think from an organization structure also we are trying out certain things which can help us.
Thank you, Shalini. Okay, so I'll open our floor for questions. Yeah, Himanshi, can you help? Yeah. Anybody? Yeah, please. No, this is a session I would like to continue for a longer time because I'm really enjoying it. Yeah, please.
Good afternoon, everyone. And Shashank, thank you so much for not only moderating this panel, but also asking that last question. I'll introduce myself. I'm Neha Kumar. I represent the Dow Jones Risk and Compliance business. And while we spoke so much digital and we heard from 3 generations of financial institutions and representatives from there, my question is, I think customer experience is a big part of digital business strategies, and so is risk and compliance and regulatory compliance. I'd like to hear from the panel into what you think takes precedence over the other when it comes to strategy. Does user experience take precedence over compliance because it takes time and regulators need you to run CKYCs and re-KYCs and periodicities? Or does compliance take precedence over user experience and then you have ops centers set up where you have to be able to relook at documentation, and how does that fall in place with strategy?
Would like to pick it up. Yeah.
Sure, I can. Thanks for that. I think it goes without saying that regulatory compliance takes precedence. There is no doubt about it, and no holds barred. Regulatory compliance is a non-negotiable zero tolerance area. On the operational risk side, there are areas where I think it's more of a risk appetite discussion, Neha, and therefore we do have some very healthy discussions on operational risk side because that's more within the bank's risk appetite. But when it comes to regulatory compliance, there are, I mean, no hesitation in saying this loud and clear, and we practice that. You can ask a lot of our partners who we work with, etc., and I'm sure they'll testify to the same thing. But I think having said that, let's be, I think one of the big things we've noticed in the industry has been that RBI is very open for discussions. As all of us know, there's the RBI Innovation Hub, there's the RBI Fintech Department, even including Department of Regulations, Department of Payment and Settlement Systems, etc. We've had long conversations with all of them where things have been worked out in such a way that it's a balance between the two. Because remember, we are not a country, I mean, India is not a country that you see in this room, right? There is, hordes of people out there who are susceptible to fraud, who are susceptible to all things. So you've got to protect the interests of all of them, particularly when you're dealing with depositor money. So, so to that extent, my view is regulatory compliance non-negotiable. Operational risk, there can be risk appetite related discussions, and RBI is extremely open for conversations, as is NPCI. So we've had lots of conversations where we get the balance between them correct,
Thank you, ma'am.
Thank you. Any other question, please?
Hi, good afternoon, everyone. I'd like to introduce myself. My name is Abhinav Nair, and I run a consumer financial advisory company focused on middle-income Indians. We're about 2 years into this journey. There was a feeling about 2 years ago that there is a partnership to be made where on the one side an organization has some regulatory arbitrage, on the other side another organization has time arbitrage, so let's work together, right? And with the and my question to you really is that now that it's been a while since some of these experiments have played out, what do you think and your colleagues who are leading different banking institutions think about the future of your continued specialization as a manufacturer working with different distributors?
Maybe, yeah, Rakesh.
Yeah, I can just take a shot at it. So I think, yes, there was always an arbitrage play. There was always the, benefits of being a not so heavily regulated entity versus being a very heavily regulated entity. And I think from the initial scope of competing, I think the world has evolved towards collaborating. And despite all of that arbitrage slowly going to go away, and we have seen that happen, the regulators are ensuring that there are no such arbitrage plays available. Well, I think coming together of I would say new age fintech / lending / payments companies with established large balance sheet players will continue to remain a very big opportunity. I mean, I'll give you a small example. So ultra short loans, which is loans up to 30 days, right? If you were to ask any traditional banker, nobody ever wanted to touch that because it never made money with your cost structure. Today, the new age lending companies' balance sheets, 37% of their portfolio is ultra short-term loans. And banks, it's only 5.5%. But this was a big need. There was a huge white space which was available. And together, people have been able to, serve that need. If we had not collaborated, if we had not come together, I think this need would have never got served, and such a big, element of the consumers' thing would have got ignored. So I think as we are progressing, we have realized that, and we speak to banks, we speak to payment players, we speak to aggregators. I think the need for collaboration is even higher as compared to the past. And at least I personally believe that there will be tremendous opportunities to collaborate and come together to give an experience to the customer, which the customer doesn't care whether it's coming from bank A or B or C or from a fintech player A, B or C. As long as the consumer's need is being served with the client experience that they really wish for, I think collaboration opportunities will be always there to work with.
Thanks. Manshi, one question. Yeah, please.
Yeah, hi.
Yeah,
I'm
thanks,
Dinesh Arora, an ex-banker in a kind of new journey on entrepreneurship. We have been listening about digital strategy and the subject matter that you're discussing and other sessions also. the digitalization part of it, wherein we are talking about the onboarding experience and the overall customer experience, that's okay. I think startups are doing and fintechs are doing a great job. Even the banks also, whether it is old age or new age. But one thing which, as an ex-banker, I really feel that we are kept devoid of is that how are these portfolios performing? Because that's the very essence of all the digitalization. And P2P story is a great learning for us. So particularly when you are talking about unsecured advance to SMEs, I would be interested in knowing your experience in terms of the performance of the entire sector in this regard. That gives us kind of an assurance on the road ahead.
I think it's a
in terms of sustainability.
pretty wider question, but everybody, yeah.
Maybe I can speak about the portfolio that we specialize in. I think if I were to leave just the COVID impact aside for a minute, I can safely say that MSME loans unsecured MSME loans, let's say up to an average ticket size of 35 lakhs, is actually one of the best performing segment for the industry. And this data is available through bureau polls, through many other ways. In our experience, this is one of the best performing and the best risk reward segment that any of the MSME lenders can be in. And I think secondly, a huge amount of our liquidity for the NBFC sector is dependent on securitization, PTCs, DAs, and each of these transactions is independently rated by the best rating agencies. So while the data is not public because a lot of us are not listed, but the fact that we are being able to securitize a huge amount of our portfolios and it is being accepted by investors with the assurance of the rating agencies, I think you should take confidence that the portfolios are indeed performing quite well. And again, I'm saying we have to leave the COVID impact a little aside. And I think if you were to normalize for COVID, I would think that the industry segment for new age lending portfolios is performing reasonably well and within our risk parameters.
Let me just add a couple of more things on this. See, the ability of banks today to use data or NBFCs to use data has only reached a certain level. Say tomorrow, if the bureau gives me details with respect to timely payment of mobile phone bills, average electricity bills, timely repayment of insurance premiums, the number of models which can be created on the unsecured side, putting all these data points together, can actually further enhance the profitability as well as the ability to do digital loans. So I believe the way that we feel very proud of the fact that an ecosystem has been created in this country on the payment side, I also believe that we are taking steps in that direction. The bureaus have become much stronger, but I also believe that there is more to be done. And as we go through that journey, probably 2-3 years down the line, we'll figure out that now it's even easier and the general concerns around unsecured lending, especially to MSMEs, come down.
Thanks.
I just add one last point.
Yeah.
I know this is a digital kind of session, but I think the one last point I'd add to what was said on this point is, from a point of view of profit recognition, loss recognition, I think with ECL coming and expected credit losses likely to come in, at least depositors, investors, shareholders can be very clear that from a P&L perspective, this is duly protected. In addition to all that the team said, the greater transparency that is coming in, the access to information, the ability to run models, etc. Futuristically, rather than incurred credit losses, if you're getting into expected credit losses, at least the P&L impact is something that will clearly be well managed by banks.
Yeah, thanks, I think, so I could take a few questions. I wish this discussion could have continued for long, but thank you everyone. Thank you. I really enjoyed and quite insightful session for me itself, and I'm sure for the audience also. And I'm sure the audience also didn't feel that it was after lunch sessions. Thank you everybody. Thank you.